Hi, everyone. It's Lee Goldstein, the Trading Director, 10 Minute Trades. I want to welcome you to episode 41 of the 10 Minute Trades podcast. And this is a weekly recap, September 6th through the 9th, 2022. And it was a shortened week, but it was a pretty good week. The week was started off a little bit tricky and a little bit difficult because the Australia rate statement, which has been a successful trade for the past 5 months in a row, started us out with a stop out to begin the week. So it was frustrating because I was expecting a huge winner on the Australia report. It is important to realize that sometimes just a small change in your setup can be the difference between a winning trade and a losing trade. And my bracket, which we've been using the same bracket for the past 6 months, was a bracket of 10. Had we used a slightly smaller bracket, it would have hit our first target, and then we would have been able to possibly get out of the trade with a small profit. So a loser could have been prevented with a tweak to the setup. But when you're dealing with a report that's been profitable 5 months in a row with very nice profits, you don't really look to tweak your setup. But you can always look back and see what might have changed, what happened. I will talk about the opens this week. We ended the week on an awesome oil open. It exploded to the upside. People definitely made money. Everyone who traded the open on Friday made money. I just want to continue with our trend that the opens are very successful. I will say this, that gold has become more challenging and the oil open has been extremely excellent to trade. Gold a little bit more challenging. We went into the ISM services report also on Tuesday. That was a 10 o'clock event, and that was a winning trade. One of the trades that my biggest difficulty as a trader, I tend to sometimes jump out of trades a little bit too fast. And I definitely jumped out of the ISM services report a little bit quick. It would have hit all my targets, and I jumped instead. So made a small profit instead of a good profit. Try to be patient in your reports. That same evening, September 4th, Australia's GDP. Again, I was expecting another good Australia report. It stopped us out. That was our second difficult trade of the week. Two of them, both of them Australia. And that's just a fluke because it could have just as easily been a good trade, the Australia GDP. It just didn't work. There was a head fake, meaning it moved in the wrong direction, filled us in the wrong direction, and then it was a small move based on the news. It wasn't a great moving report in general. The Canada bank rate statement was an excellent trade. That was the next day, the 5th, and we'll talk about that in another video, but that was a real nice winner. We used a trap trade on the Canada bank rate statement. Now, we were going to have a trade room for the Beige Book. The Beige Book is a Fed report that's been very inconsistent for many years, and we have not really had a great setup for it. Last month, the breakout worked on the Beige Book, and I decided not to have the trade room. Very honestly, Apple was having their event. I was extremely interested in the Apple event, and Beige Book, like I said, has been very inconsistent, and it traded completely differently than it did last month. You could have had a range trade setup that could have worked. A breakout with a bracket of about 18 ticks seemed to work. Very slow entry. It was over 40 seconds after the news came out that it would have worked as a breakout, but I am seeing that's two breakouts in a row that could have worked. So I'll very seriously consider trading Beige Book, at least having a trade room for it next event. So those Fed reports in a time of inflation and worry about interest rates, they should move markets. That's why I was thinking originally to have that trade room for the Beige Book. It was definitely not the type of move I would have expected, though. Then Wednesday afternoon, we had the API report, end of the day on Wednesday because of Labor Day. That report was one day late. Oil was down $5 that day, and that makes for a very difficult report, especially the time of day that that API report takes place. It's 4 p.m. in the afternoon. The oil market closes at 2:30, so your liquidity challenge to begin with on that report in general. Figure this, if you get a build, which normally would push the price down, you're already down $5 on the day. You might have trouble pushing the price down even more. So I was extremely concerned. I was thinking maybe not trade it. And then I just said to myself, you know what? It's so volatile, oil. I'm going to just trade it normally. And we also have a second trade on the API report. You'll have to come into the trade room to understand how we trade that second trade. I'm not going to give it away here. I'm sorry. But the first report didn't really do anything. It traded early. As we were putting our range on the chart, we missed the first report, and then we were able to grab 9 ticks on the second method that we use for trading. Then the next day on the 6th, had very high hopes for the European, the ECB main refi rate, which is the European Eurozone bank refi rate. It's their bank rate decision. Everybody knew that they were going to raise their rates 3/4, 75 basis points. And I thought that it would dramatically move the euro, which we were trading. And very often what happens when you're expecting a giant move, there's lots of news maybe, or there's a gigantic report that everybody's watching. Sometimes you just get the most normal or minimal reaction, and that's exactly what happened with the ECB. It just barely hit our first target for a small profit. So instead of exploding through the wall, through the roof, it just gave us a small profit. Let's talk for a second about natural gas. Natural gas has been one of the best trading events for the past year and a half, up until 2.5 months ago. Natural gas has now reached a point where it's unsafe to trade. I don't recommend trading natural gas at the exact moment of the report because it's not returning proper profits. It stopped us out. Normal stop out, not a significant amount of money, just a one contract stop, but it turned a winning day into a losing day, and then we were able to just barely turn it around with the crude oil report. The crude oil report, the Wednesday, which was Thursday this week because of Labor Day, has been trading well. So we're still trading the breakout, and we've discovered a phenomenal second opportunity on that crude oil Wednesday report. Again, come into the trade room. This is a trade that we're going to start trading next week. So we now possibly have 2 Wednesday crude report trades. Excellent, excellent crude oil report. What we've been doing is expanding our target because of the way crude's been moving on the wins. Every time it wins, it goes well more than 50 ticks. So we can go for a 30-tick target with one contract on crude and trade that report with a very good risk to reward. And then our final 2 events of the week, like I had said, the oil open was a big, nice winner Friday to end the week, and the Canada jobs report. Normally, the Canada jobs report trades by itself. Canada can be very challenged with liquidity issues, and it usually is. In other words, because there's not a lot of good liquidity, there's not a lot of orders around, you get a lot of whipsaws or you get a lot of wicks where the order, it might go through your target and not fill you. But this was such a negative jobs report. They were expecting 15,000 jobs to be created, and there was a negative 39,000 jobs created. So that had a very big news offset, meaning the result was very far away from what was expected, which often creates an excellent move, especially in the Canadian jobs report. And we had a very nice winner. That is a family money trade. Even when it trades by itself, it does have a little bit of extra risk. And the Canadian report, the Canadian jobs report, and the oil report ended the week on a great note. So I hope you enjoyed this happy podcast, episode 41. We had a little bit positive week. Australia hurt us, but we definitely were in the green. The trading account, since we started using the new software, is still over 30,000. Even with all the testing that we do, all the weird trades that we take, the software is really performing well. It's been really a great, great upgrade. We're very excited about how excellently it's been doing. JOBB version 10, we're really proud of it. So thanks everyone for watching our podcast, episode 41. And you know what we say at 10-Minute Trades. I'll see you in the trade room. This is Lee Goldstein, the trading director, signing out. Take care, everyone.